I've always been somebody that tried to succeed in life. I did a lot of adventures early on as far as work goes. I did some investing into property. So I had a couple of homes. I paid off my first home when I was about 30 years old. I bought 2 rental homes. I'd bought 2 franchise restaurants along with my wife at the time. By the time I was 35, my marriage to my high school sweetheart was on the rocks. And by the time I was 36, I was bankrupt.
Oh my.
Yeah. So at that point, I'm starting over. I think maybe that's part of the reason I am the way I am. I'm kind of money driven, and that would probably come from the fact that I didn't come from money. My parents, although they had good jobs, they didn't have a lot of money. My mother was actually widowed at 18 and with 2 kids.
I'm sorry.
Living on the East Coast at that time, really didn't have money. So they went into the trades. They were both into the flooring, but it wasn't lucrative for them. So I guess that drove me to feel the need that I needed money. And what that did, unfortunately, was in my 30s, when I was very much involved in acquiring real estate, acquiring 2 franchise restaurants. They were expensive. It was like 130 to 150,000 down. And then, you would get loans for the remainder.
Just a reminder, folks, that before delving into this podcast, the content in this video is purely for entertainment and informational purposes only. Always consult a licensed professional before making any investment decisions. Remember, investments that aren't FDIC insured can fluctuate in value, so please invest wisely based on your own needs and risk tolerance. Now, on to the podcast itself. Welcome, YouTube, wherever you are around the world. This is our next episode of Beyond the Paycheck with your co-hosts, Combos with JJ and Leon from Leon's Money Flow. On today's episode, which I believe is episode number 6, we have another special guest joining with us, Bert from Acre Homestead. Homestead, right? That's how you pronounce it? I'm assuming. All right, perfect. So those who are not too familiar with Bert and his community, why don't you kick it off and do a little brief introduction about yourself?
All right, gents. Good morning, and thanks for having me on your podcast here. Yes, it was a little early for some of us. Yeah, so including myself. I mean, I think we were talking, I did do a 12 hours yesterday and 12-hour shift, and it was a little bit of a late night. And I was so excited about doing this, I didn't sleep well.
So just for those viewers who are curious, we actually we're recording this at, technically 9:30 a.m. Eastern Standard Time. And some of us, like Leon, slept at 4 a.m. or something?
2:30.
Oh my.
Yeah, so... And I just woke up 15 minutes ago. So,
jokes.
Nice. All right, guys. So, yeah, as you mentioned, my name is Bert. I'm under Blossom at Acre Homestead, and I've also got a YouTube channel that is just a small channel, but it's homesteading on just under 1 acre here in southwestern Ontario.
It's a pretty cool channel.
Thanks, Leon. Yeah. So I was kind of interested, like I said, in coming onto your podcast because as we'll go into details, as somebody that's had to start over in life, as most people tend to have to do, whether they plan to or not.
Yeah.
I thought it was probably worthwhile sharing my adventure. Not that it's special, but
everyone's special in their own way. Come on.
Everyone is special. But if you like, do you want me to share my Blossom right off the bat here, or?
No, you don't have to. Just go through your story first.
Go for this. Okay. All right. So my story, basically I've always been somebody that tried to succeed in life. I did a lot of adventures early on as far as work goes. I did some investing into property. So I had a couple of homes. I paid off my first home when I was about 30 years old. I'd bought 2 rental homes. I'd bought 2 franchise restaurants along with my wife at the time. And by the time I was 35, my marriage to my high school sweetheart was on the rocks. And by the time I was 36, I was bankrupt.
Oh my.
Yeah. So at that point, I'm starting over because...
So before you, I kind of want to ask a bit more clarification on that. So you said that you paid off your first home when you were 30. Did you grow up in Ontario, in southwestern Ontario, or did you move around a bit more throughout your childhood?
I moved around a fair bit. I'm originally from Nova Scotia.
But very nice. I believe Candace from Mountain Finance is also from Nova Scotia.
I believe she is. I think she's from the Halifax area. I'm from Cape Breton Island. And but I did move here as a small child. I started school there, but I did move here in preschool, like in public school, and spent most of my life here. I've got family back east, of course, but most of my time has been in southwestern Ontario, in the vicinity anyway that I'm in now.
Gotcha.
So,
Very nice.
Yeah.
And so how do you remember, like, do you remember anything from your childhood? Was everything, I guess I kind of wanted to touch base a bit more on like the financial aspect. Do you remember much growing up your childhood? Was like was money and finances ever tight? Or was everything, more or less okay? Do you want to just get into a bit more details
Uh,
on that part as well?
I think maybe that's part of the reason I am the way I am. I'm kind of money driven, and that would probably come from the fact that I didn't come from money.
Mm-hmm.
My parents, although they had good jobs, they didn't have a lot of money. So my mother was actually widowed at 18 and with 2
I'm
kids.
sorry.
So then she got remarried, and anybody living on the East Coast at that time really didn't have money. So that was how we ended up back in Ontario. My mom was from Ontario. My biological father was from Nova Scotia. My stepfather was from Nova Scotia. So we ended up back here to, I guess, make a life for themselves.
Mm-hmm.
So they went into the trades. They were both into the flooring, more so later on in life.
Gotcha.
But it wasn't lucrative for them, I guess you might say.
Yeah.
It went away there. So
Yeah.
yeah, it's kind of. So I guess that drove me to feel the need that I needed money, I guess. And what that did, unfortunately, was in my 30s when I was very much involved in acquiring real estate, acquiring restaurants.
Restaurants too, huh? Okay.
Yeah, I had 2 franchise restaurants.
Were they
Unfortunately,
expensive to acquire, actually?
they were expensive. They were turnkey franchises, right? So you're investing. I think you had to have down at least. I'm trying to think back. It was quite some time ago now, but I think it was like 130 to 150,000 down. And
Wow. For each, huh?
yeah, and then you would get loans for the remainder. So when I went through my divorce,
That's quite
unfortunately,
hefty.
it is. It's a lot, right?
Yeah.
So having said that, there was a lot of leveraging going on. And when I went through the divorce, my lawyer at the time basically said to me, he goes, you guys can fight about this, because it wasn't, I won't lie, I was blindsided. I'm not saying she was to blame, because there's always 2 sides to every story, and everybody's
for
to
sure.
blame, right?
Mm-hmm.
But I was very blindsided by it. So my lawyer at the time said to me, you guys can keep fighting about it, but we're going to end up with everything, and basically suggested I walk across the street at the time where his office was a bankruptcy place.
What?
So that's what I ended up doing. And during that time, I was the only thing that kind of helped me a little bit was I was living in a home that I had moved into, one of the rental properties. It was a very small home, and there was no equity. So at the time, I was able to stay in that home through the bankruptcy, because they didn't want the place, because it was no point for the bank to take it and try to sell it, as long as the mortgage was being paid at the time.
Mm-hmm.
So I had that going for me, because at that time, property values kind of started to turn a little bit in the town I was in, and I was able to sell the home and come out with, I want to say around $20,000, at 20 to 25,000, somewhere in that range. But it was money I didn't have at that time, right? It was money that it was a kickstart for what I needed to do. Now, having said that, in the meantime, I did remarry, and
Happily, hopefully.
yes, I'm still with Cindy. I think we're happy. Yeah.
You asked her, right?
Right. I'm like, but anyway, in all honesty, we're very like-minded as far as finances go, so it does help a lot.
Mm-hmm.
And I was very, very fortunate that my brother-in-law, my wife's brother, was a very generous person, and financially in a situation where he was able to help me out. And the home we are actually in now, he held the mortgage for me. So during the time where I was getting out of my bankruptcy, because it was 7 years or 5 years or whatever that time frame is, where you can't really do a whole lot.
I think it is 7 years. I think with the bankruptcy, it stays with you.
Right?
Yeah.
You're pretty tied up, other than getting, a credit card that you start building up your credit and things like that. But you can't
like
really
like a secure credit card.
Exactly.
Something of that sort. Yeah.
I think Capital One, for instance, has you would put so much money down, and they would basically hold your money, and you pretend you're using a credit card. But he was very, very generous with us and held the mortgage. So had that. So what was that? I think by the time I was 42, 43, somewhere between 42 and 43, I had paid him back. So it took us about 4.5 years. Just basically focused all extra money just went back to him, because I didn't want to have that debt, right? I've never been a fan of debt, especially I can't imagine normally ever going to family, right? You do, or friends, but because there's usually you don't mix those two together. But so I didn't want to disappoint him, and I didn't want to disappoint my wife. So we focused on that, got it paid down. And during that time, my wife wasn't working, because when we got married and started having our children, she stayed home.
Your first wife?
My first wife stayed home for the first 7-8 years, and then she started working. I have 2 older children with my first wife. Now Cindy and I, we have 4 children.
Big
Wow, family of 6.
Yeah. So yeah, I've got two grandchildren. But
wow. Okay.
Yeah.
How old are they?
So, oh geez, 5 and 2, 3. Yeah, they're young. They're young. So we got the house paid for. That was just with my income. So like I said, that's just focused. It was a lot of overtime. As you guys know from our chats, I do a lot of overtime all the time.
You work a lot.
I do. Partly not all by choice, because with I'm a shift supervisor, a production supervisor at a factory, and if the shift is working, I'm working. But it gives me the money that I can invest in things like that as well, right? So,
right.
So at 42, 43, I had this home paid for, and once that was done,
is it the same one that you're in right now?
it is. Yeah, it is.
Brings back a lot of memories, huh?
Right. It's nice to have that taken care of off the plate. I mean, there's always that whether it's worth buying a home or not, or just investing. You know, there's that whole scale that you have to decide on your own. But
yeah,
my wife is very family oriented. She's Portuguese background. She's born in Canada, but her family's from Portugal, and owning your home is very important to them, as it is for a lot of cultures.
Right.
So that is something we just decided that we would own the home. But once that was paid for, so that was almost about 9 years ago now, because I'll be 52 this year. So that money just kept getting put into a bank, because at the time, in my earlier years, I would say I did invest money, RSPs, things like that, but not a lot. And it was always through the bank. It was through off my paycheck into the bank.
So you had a supposed financial advisor with a big bank, right?
You got it, right?
Through all of it? Yeah, okay.
You got it.
We all know how that story goes.
Exactly. So you don't really make any money.
Well,
Pre-COVID,
actually, you not for you. You made you made that advisor rich.
Exactly.
And the bank,
exactly.
right? Because everything's invested in their line of very high commission fee based mutual
products.
funds.
Yeah.
You're just a product for the bank. Well,
so
for those who are not familiar, when you walk into a bank, they're actually not there to serve you. You're just a product for the commissions, right?
Yeah, they have targets.
Unfortunately, that's how it works, and that's one of the main reasons why a financial sector in Canada makes the most money. Well, it's an ongoing, it's a never-ending loop per se. Yeah,
Yes,
that's how it works.
that's very true. So after the home was paid for, like I said, I kept putting the money in the bank, focused more, instead of looking at investing and things like that, I was focused more on high interest savings accounts. So I was into the EQ bank, I was into the Laurentian bank, the B2B bank, whoever was paying
those promotional rates, right?
Those as much interest as I could get, and not knowing a lot at that time. And I still don't know a lot, guys. The reality is I'm still learning every day, but not knowing that, that interest, for example, is taxed, I believe, at the highest rate for
interest income. Tax,
right?
It's taxed 100% at your marginal tax rate. And I believe for you as a ship supervisor, that marginal tax rate is pretty high.
Yes,
right?
Yes. So
is your wife working at the moment? Are you guys filing?
Nope.
Okay.
No, my wife hasn't worked since we got married. So
by
it's
choice?
Just me. Yep, by choice. She chooses to, because my wife is an educator. She's
4 kids.
Yeah, she's a public school teacher. And really, like Leon is just kind of alluded to, by the time you pay daycare for 4 kids and things like that, and reality is she really wanted to teach the kids herself. So she's chosen to homeschool the kids.
Big responsibility.
Yeah. So, and they range from 12 to 6 years old. So, there's quite a few different grades going on. But, that's her forte. I don't get too involved. I try to teach them. I've started trying to teach my kids the investing side of it as much as I know,
right?
To the point where I bring them out here to my office and I have them click through the screen and invest their money so that they can have an understanding, right? In fact, my 10-year-old, actually 9-year-old, he was very excited because he was asking me, because just to kind of give you an idea, they're all invested in HEQL.
Okay.
So aside from
nice.
HEQL, they have a second holding. Two of them have a second holding, which is the QQQL. And the only reason I have the two separate holdings, because I know it doesn't really make a lot of sense, but the only reason I have the two of them
No, you
is
can
the
do
one.
it,
Yeah, right. Well, the one
right?
is
Because investing
money.
is very personalized as long as you know like what they are, what they hold, and your overall time goals. Like it's everything is up to you, right?
Right.
So, and nobody can be the wiser in saying whether you're doing something right or wrong. Like at the end of the day, because everybody is a retail DIY investor, you take responsibility for your own actions
Oh, yeah. And we'll
and
talk about that
inactions for
still.
that matter.
We're going to get into that yet. But yeah, so their HEQL is basically their overall savings. And then we have like two of them have a small position in QQQL, which you'll probably see on our spreadsheet. That it's just because the two older ones have little side jobs. And my oldest
Okay.
daughter, her and her mom make jams and jellies, and they sell that.
That's very
And
cool.
yeah,
Yeah.
and my oldest boy at home here, he was doing plant sales in the spring, so selling pepper plants and things like that for gardening, right? So whatever they made there, they could put half in their piggy bank, and half had to go into their investment accounts, and that's in the QQQL so that they can see what they've accomplished, right, as opposed to mixing it in with the other HEQL.
At age, do they know do they know where their money is going to in the future, or do they
Well,
think it's just going away?
it's kind of funny because my daughter is very excited about investing. Actually, when
That's
she
the
knew
12-year-old, the eldest one?
yes, and when she knew we were doing this morning, she was just amazed. Like, those guys are famous. They want to talk to my dad. Like, they're just right. So to her, this was really, really cool. But yeah, so she doesn't ask a lot of questions about it, but she's excited to see her money growing.
Right.
The second oldest,
Hey, we all, I mean, at
well,
that
we all
point,
get
you know
excited
that,
about that, right?
I mean, we all know that she is going to be very financially set for her future. So you wouldn't have to
Right.
worry on that side.
Right.
As long as she stayed disciplined and consistent throughout her adult years, that's what anybody wants as a parent, right?
Exactly.
To be
Exactly.
prepared.
The second oldest is a boy. He has a little bit of a tough time with the idea that he's got money sitting in there, then he'd like to have, this video game or this or this. Well, why can't I take it out now and put it back later? It's like, no,
Right.
bud. It doesn't work like that. You get your portion. You got to save up. The the second youngest, I'll say, is a boy, and he was out here with me doing his investing the other day, and we were buying the HEQL, and he says, "What am I buying?" I said, you're buying thousands of companies. What? I said, thousands of companies. So if I keep buying, will I own them? I'm like, well, no, that's not going to happen. But you'll own
You own a
pieces,
piece of it. Yeah.
You'll own pieces of thousands of companies, man. But what was it? I can't remember the actual game that they play or something, or module, or I don't know, but something Microsoft owns. So I said, don't worry, man. I said, Microsoft is in here.
Minecraft.
Yeah, like all that stuff, right? It's in here. Oh, like that just made his day. Like, he was super excited, right? So
Yeah, he's a.
So, I mean, they get it. And the youngest one, I mean, she's pretty young, but she's just happy to go along with it. And, they're making money. So
That's good.
It's good. It's good. And that's what I want to keep pushing that, keep getting them involved. Whenever I do their portion, I'm going to have them come out with me and actually sit and do it and try to keep that interaction so that they eventually hopefully absorb more and more of the whole. And they can, as they observe, because they'll see my stuff out here too, right? So as they observe,
Do you work from home actually, or do you work at the office?
I don't. I work at a factory.
Oh, okay. So you work at the okay.
At the factory.
Okay.
I just have. Fortunately, I've got a nice setup here.
It looks very nice. It's
This
very
is
nice.
off the back of my shop, and it's just an old building. But this is just a little add-on that was done. And initially, when we moved here, at one time I had chickens in here. Then I had goats in here. And then I redid it all, and I set it up for my wife. She was doing some photography as a hobby on the side, and then kind of lost interest. Got busy too. I won't say she lost interest, but she got busy, and then it turned into storage.
It's another full-time job for those farm animals.
Exactly, and especially with me working more and more all the time, it seemed like she had to take on more and more, and then it turned into storage. And then the one day I came home, I think it was last August of last year.
Mm-hmm.
It was because I had set myself up in the living room with a computer and stuff, and I had joined Blossom, and I had started doing a lot more research. But we'll get into that a little bit yet.
Yeah. No
But I
worries.
come home and she had cleared out this room, totally cleared it out. It's about a 12 by 16 room.
Mm-hmm.
And she had a desk set up with my laptop, and it just, nothing was really, the floor was concrete. There was nothing really finished, no pictures, like stuff like that. Right. But it was a huge gift, right? Because it was a space I could focus and I guess pretend to be fake it till I make it kind of deal. But
That's so sweet.
it was very kind of her, and I
Yeah.
do appreciate it to this day, and we've turned it into something kind of nice. So
Yeah, it looks very good.
but if I backtrack a bit too, so yeah, I was throwing all my money into these high interest savings accounts, and I had been talking to one of the guys I work with, a coworker, a co-supervisor actually, and he says to me, he goes, do you ever invest in the stock market? Well, I did, but not directly, right? Not where I set up my own account and was buying stocks. So I set up on Wealthsimple. Well, I already had Wealthsimple because I was using it for my income taxes, and I believe I forget what it was called before that, but it wasn't Wealthsimple, but it evolved
It
into
was like
Wealthsimple.
separate stuff. They had Wealthsimple cash, Wealthsimple tax or investments.
Yeah,
early days during COVID, it was a bunch of different
Simple Tax.
simple tax. Yeah,
Yes. Okay. So I was using Simple Tax. And,
I think that's the precursor. Yeah.
Yes. So that I already had that set up. So I basically went in and I started checking it out, and I transferred some money from the high interest savings into this account, and I was playing around with it. Found out very early on I'm not a stock picker. I bought in some stuff that did not do well. I bought into what was it? First Republic Bank or something like that.
First Republic Bank, yeah, something like that, something of the sort.
Yeah, and it was over a $10,000 US loss for me because the bank
Oof. Okay.
it went under very,
Wow.
very quickly during COVID. It was one of those ones that just kind of dove and gone. I bought into some helium stocks, which stopped trading. If you're familiar with Royal Helium, I still own shares. They're just kind of sitting in limbo because it's not trading. They have to get back on the stock exchange, but it's kind of sitting there being held, I guess.
So is that like locked up money?
At this point it's forgotten, lost money. I would say I probably, even if it does start trading again, it's going to be pennies. It's going to be pennies on the dollar, right? It's a lost cause. But unfortunately at that time I wasn't using, like, I was in TFSA, right? So I did lose that room.
Oh,
It wasn't in a non-reg, I guess it was what I was trying to say.
Ooh,
Yeah.
that's tough.
Yeah, stuff you don't, when you're not really educate on things, this is why I really love Blossom, and like we're all in that WhatsApp chat, and
I would say our WhatsApp group is better than Blossom.
you know
Slightly
what?
biased, but
I think
yeah.
it is far better than Blossom. I'm on there
Because the only problem
way
with
more
Blossom is there's two, like, you have investors of all sorts and all different viewpoints, and there's nothing really concrete. Like, sure, I think it's good for a beginner to get those insights that you need to start, but then at that point, it's like too many different viewpoints, too many different opinions, and then there's nothing really cohesive. So it's
Yeah.
better to find what you're interested in, go into that community, and then build your own separate little community, which is what we have. And because that way you find like-minded people and actually be able to share more insightful cherry picking that you can actually use
100%.
without suffering big losses.
Yeah,
yeah,
100%.
because if there's so many views like on Blossom, sometimes you get analysis paralysis
Yes.
and I don't know what to do.
Yes.
Yeah.
So then I bought into another one that was a kind of a big loser for me. I don't know if it was Mind Med or it was some kind of a mushroom oriented
Mushrooms? Okay.
company. Anyway, believe it or not, this company
Wait, actually,
ended up
are we talking like
like medical,
a trip? Oh,
no,
okay.
medical, not like that. But no, the weirdest thing, like they end up merging with some oil and gas company and became an oil and gas company, which I thought at the time was, okay, well, that's not the end of the world.
Mhm.
But it's in South America, and they didn't file their paperwork for the last 2 years. So they've been halted. Right. So
Okay.
again,
Is this like
bad
a small
choice.
cap or a
yeah,
micro cap?
Yeah, I can't remember. It wasn't a large cap by any means,
It
right? 'Cause
sounds
like I said,
it sounds like a small/micro cap.
it
Yeah.
sounds sketchy, is what it's right.
Was it
Anyway.
was it like trading like pennies on the dollar or something?
No, it probably is now. it was another bad choice anyway. So after a few of those, I think we were coming up. It wasn't too long after all this was Liberation Day.
Ooh,
And
okay. Spicy.
I did take the opportunity. I saw things dropping, and at that point I was like, how much more can I screw this up? So I threw a whole bunch more money in, and I bought into like Bert Gold, Coupang, Canadian National Railroad.
That's
some
a
of
good
these,
CNR is a good one.
they
Gold,
are,
I think, is a
right?
good
They
one,
are.
yeah.
There was a handful that I bought into. I saw the dive, and I just kind of threw money in. It jumped back up,
dividend
and I
stocks
got
now.
out.
Dividend stocks now at this point.
Yes. Yeah, more of the blue chip, kind of.
Any
which
chemical?
was probably, no, not at the time. Not at the time. So I did that, and then when the money came back up, I got out.
There you go.
Basically just kind of tried to recoup some of my losses. And I hung on to a few things. I hung on to Coupang and Barrick for a while, but once I came across, basically, I was working in a different factory at the time. I was covering a different location, and I was talking to somebody else, and they said to me, well, have you ever looked at ETFs? And I'm like, ETFs, right? Because again, very novice, very green. And so
That's okay.
These exchange traded funds, right?
We're all novices in our own way, right? That's why
Exactly.
the learning never stops. You all start somewhere.
He starts talking about these things, and he starts talking about Adriano and passive income investing and things like that, right? And I'm looking at him, I don't know what you're talking about. So I go home, I start researching, and I'm like, whoa, this seems more like something I can understand, like something that maybe suits somebody like me that is not a stock picker.
More tangible.
More tangible. I can see how it works, and I'm not picking losers like I continue to. Well, it felt like I was always doing. So basically, at that point, I sold out of all the stocks I had that I could sell out of.
Were they wins or losses or somewhere in between?
I came ahead.
That's good.
Took some losses on some, wins on others, but it was enough that I I made up for like the bank loss and things like that. So I mean, it wasn't.
Did First Republic
bad.
Bank get delisted?
Yeah, it ended up being acquired by one of the large banks. I forget which one of the huge banks in the States. But of course, if you were a stockholder, you were out of luck. It was just
it's gone.
Yeah, gone. Mind you, if I was educated more at the time, I would have had it in a non-reg. I wouldn't have it in a TFSA and things like that. But
so all of these holdings were in your TFSA or some in taxable?
At that time, I don't think I really got into taxable accounts. I think I just I had an existing TFSA that at one point I had pittance in it. I was like a savings account, right? And
I think that's the thing that's the biggest I think shortcoming of naming this account as a savings account, where like the statistic is something along the lines of where like 60% of all it's somewhere between 50 to 60% of all Canadians don't actually invest in a TFSA.
Exactly.
They treat it as like a savings account, and when it should not be at that point, it should be an investment account because all that compounding is all tax free.
Yes.
So there's a huge shortcoming.
There's a lot of stuff.
Granted, there's a lot of political problems in this country. We're not going to go through that, but
don't get us started, JJ. That's a different podcast.
Yeah, we'll start another series on just talking about political issues.
Right?
Exactly.
Yeah. So, did my research, looked into that, and basically sold out everything. Went totally into ETFs. Unfortunately, I did a lot of bad choices.
Still?
Even then, still, right? Because
what are we talking?
Well, you're following the herd, right? You don't know what you're doing. You're following the herd right down, Yield Max lane and
okay.
MSDE lane, and
Do you still have conviction and strategy?
I do. You
don't think it's a whole Ponzi scheme?
I don't think it's a Ponzi scheme. I really hope not. Jeez. JJ, don't talk like that, man. How do you feel? What do you think?
I kind of see it as it is, and I'll take opportunities to swing trade it when I feel like it. But I don't think, I'm not sure if it's a really like a long-term hold. Granted, at this moment, it's doing pretty bad, but
yeah,
20 to 30 years out, maybe. In the short term, it's you're gonna have. Well, I mean, you kind of know where it's at right now.
Oh yeah, yeah. It's the anchor.
Did you see that Gary shaved his head on his latest video?
Yeah.
Yeah, I don't need to
Not
do
because
that.
of MST, but
I think it was
yeah.
a bet or something. I'm just like I saw the thumbnail and I was
Well,
like, oh, okay.
I
Yeah.
actually watched the
I
video
watched it. Yeah, he said he did it because he shaves his head every
for each of
time
his children.
his child gives. I mean, his child is born.
Yeah,
Very cool.
basically grows his hair with the baby.
He should have kept
Yeah.
his hair.
Fortunately for him,
I would
it'll
feel
come
like
back.
some people can rock the bald look. I don't think he does it that well. That's how I saw it, but yeah,
I figure he'll start wearing his cap again.
probably.
I can't either. I just look like a monk or something.
Yeah, you can wear a bald cap, and then we'll see how that goes, right? As a test.
I just have to keep mine short now because if I don't, the sides come out and I look like Bozo the Clown.
No, I think I think you rock it pretty good.
Well, thank you. All right, so back to the journey here, though. Yeah, so we'll
Oh, while we're talking about your kids, do you so 2 out of your 4 kids invest or invest a little bit, or 3 of them?
all four of the young ones invest.
Oh, even the
Yeah.
6-year-old, 7-year-old.
Yeah, so she's invested as
Okay.
well. They're doing pretty well.
Very
I mean, it's
nice.
only been again since last fall, right? Because I didn't
Hey, they still have a lot of time. No, not even,
exactly,
like-
and I'm just trying to remember what their numbers are. But I know the oldest one, she's up like $1,300 in the last, it's was it 9 months?
Mhm.
You know, the second oldest, not far off either.
How are you doing the allocation? Is it 50-50 HEQL, QQQL, or is it like 20% in QQQL?
No, it's all HEQL unless they've contributed by their little side job. So only 2 of them hold only 2 of them hold QQQL, and because they're doing little
oldest ones.
they're doing little side gigs. And I just, like I said, I just keep it separate so that they want to know they can go in and go, okay, this is what I've accumulated by doing this. The other is
Are
money,
they all individual RESPs, or do you have like a joint RESP for all of them?
well, here's the kicker.
Yeah.
Daddy's going to get punished for this because they're all in non-reg.
Uh,
Yeah, because at this point,
Is there any particular reason why?
we have an RESP set up for the kids, but RESPs, as far as I know, they're set up as a family unit thing.
Mhm.
Right. So to keep
Okay.
their money separate, I've set it up in non-reg.
The taxes when you sell. Okay, that's gonna
I
be
know,
problematic.
I know. It's I'm
Yeah.
going to take a hit.
Yeah, especially since
Unfortunately-
if it's in non-registered, it's under your name,
It
not
is.
for them. That's
The
the
worst
big
part,
problem.
the worst part too, even if I put it in trust, which I'm working on because I've reached out to Wealthsimple and they put me on a waiting list to do in trust accounts.
Okay,
Yeah, I think they mentioned they want to come
Yeah.
out with that.
that's a
So
good
they
idea.
they are coming out with it, but the kicker, you're still the guy taxed. If you're contributing to an
Yeah.
in-trust account, you're still nailed for it. But the thing I like about it, and my hope is that they get it set up soon so I can do this transfer early on, and that way I don't have to do it as a big transfer later on, right? Because once they're old up, it just goes into their name, and then I don't have to pay the tax at that point.
Do you plan on do you plan on working in 10 years? So let's just say for your oldest, let's just assume that everything is still in non-registered until they turn 18, and I guess you'll do the transfer then.
Right.
Because at that point, even if you transfer accounts as deemed disposition, so that counts as a sale.
Exactly.
So let's just say for your oldest, 12 years old, so there's a 6-year timeline. Do you plan on maintaining the same marginal tax rate that you are now? If not, then it's less of a problem.
Exactly.
so, Then we have a big tax problem that you need to start thinking about.
Yeah. My goal, honestly, is to be 55, 56 was my hope.
How old are you now? 54?
I'll be 52 this year.
You too.
I think you're the same age as Paul then, right?
I'm very close, very close.
Yeah.
Yeah. That's my hope and dream, but it really depends on what the market does and if I can keep building that dividend
Snowball.
payout. Yeah, that snowball up. I mean,
No more yield max.
Right? Yeah, exactly. Exactly. I need MSD to recover so I can get out of that and get into some more not trustworthy, more steady eddies, right? Something that's
You have me as an example to follow along, right? So
well, there's a whole bunch of guys on our chat that they're just way smarter than I am. So I'm taking a lot of that in. And I don't know what point you want to go through this spreadsheet here.
we keep going.
Okay. Well,
Yeah, no rush.
sounds good. Okay. So I get into the ETFs.
Unless Leon, you're in the time crunch, but otherwise we're just gonna keep going
No,
along the
I'm
flow.
Okay.
Yeah. No early breakfast for the parents, huh?
No, not this time.
Okay, they can wait
Maybe
until
tomorrow.
tomorrow.
Right. So basically last August, September, I went full in all ETFs. Unfortunately, I did lose some money on Yield Max. I have lost. My biggest loser right now is MSTE because I'm down, I think, $52,000 in there right now.
Ooh.
So it's
Unrealized.
unrealized. Yeah, that's a good point, Leon. It is unrealized. And as long as it keeps paying the dividend, I just
Still
keep
in your TFS.
reinvesting it. It's in, I have multiple accounts, right? I've got two. I should explain. Now, I say I've got multiple accounts, but because my wife has chosen to stay home,
Spousal RSP done.
right? I've made use of her TFSA because she wasn't using any of that stuff. So I've taken advantage of that. I've maxed out her TFSA and I've maxed out mine, and we're working on the RSPs, and then of course a little bit non-reg, and then we've got 2 margin accounts. So I've got multiple accounts. It's a lot to keep track of, and that's.
Is everything consolidated onto Wealthsimple, or do you have some bank account somewhere else?
I have
then
the
that you have,
Wealthsimple and Canada Life.
Okay. Okay, not too bad. At least everything is on one platform.
Yeah.
Granted, if you ever become a non-resident, that may be problematic. So you may want to have a fail-safe.
Yes. Never know, right?
Oh, yeah.
Yeah, because Wealthsimple does not support non-tax residency. So if you want to become an expat, or if you ever want to leave the country for like 6 months or something, then you'll need to look at another platform.
Yes.
Yeah. I believe international broker is still the best.
Okay.
Yeah.
Yeah.
Oh, well, Questrade. Okay, I should probably rephrase. Questrade, it will be the best if you're not dabbling with margin. If you have margin, do not do Questrade because they're almost as bad. Their margin rates are so terrible. They're almost as bad as the big banks. Whereas
Wow.
but IBKR, they have trading fees, yes, but then if you don't trade that much, like if you do like slight micro adjustments here and there, if you do like 12 to 20 trades a year, it's not a big deal. But they have the lowest interest rates possible, and they have the best, I guess, international support coverage. So that is something you might want to keep in mind if you ever, want to like leave this country. God forbid, it's so expensive to live here.
Yes. Well, the other thing
I don't believe it's gonna change anytime soon.
No, I think it might get worse. But I am curious though what's going to happen with Robinhood coming in, because now they've got it.
True, right?
right?
Oh yeah, they are.
So-
They're a direct competitor.
Yeah, so that could make things pretty juicy. Well, we'll see.
And-
Spicy.
Yeah. There's also Moomoo. I haven't looked in too much on their margin rates, but I know that the cool thing is they have 0 foreign exchange fees. So that's pretty cool. And
Yeah,
they
that is
have a
cool.
lot of promotional stuff. So like you can get a lot of
Hey, if you ever get a sponsorship, do a deep dive.
Because I think they have more of an AI type platform too, right?
Yeah.
Yeah, and I'm not sure if that's good or
you
bad,
can
but
get a lot of fees rebated too. So
okay.
I mean, we have
Interesting.
pretty
quite a bit
cheap.
of options, but I mean,
Yeah, more and
still,
more.
Wealthsimple is the best one so far. Well, actually, if Robinhood, okay, well, I've heard really good things about Robinhood. It's basically the same thing in the U.S.
Yeah.
So if it does support like expatriate stuff, and I believe their margin accounts behave very in the same manner as the Wealthsimple. And if that is the case, and they're able to set up a full line of products here in Canada, that means that at least from a non-residency perspective, they might be the better option to go. I mean, we'll see in the next couple of months or so to go.
Yeah, exactly.
Mhm.
So lots of opportunities there, I guess.
Yeah, for sure. So at the current moment, Bert, what kind of is it just your here? I think this is a good one. Is your wife Cindy aware of where your finances are in as a whole, or are you the main money guy?
I'm the main money guy, but she's aware.
Mm-hmm.
She has the what do you call it, the Snowball Analytics app on her phone, so she follows
Okay.
along.
That's very good.
Yeah, it's not that she's not interested, but she just kind of leaves it.
Does she have all their passwords? God forbid something happens to you, she needs to take over, right?
You know what?
Because especially since if you have young kids, you have a
yeah,
lot of dependents involved, you need to have fail safes.
exactly.
And you know the state of this country and anything. Oh, actually, where you are right now, is it relatively safe crime wise?
Crime-wise,
and-
yeah. Well, we're in the country, and I mean there is crime around, but for the most part, it's very limited in this neck of the woods, right?
more chances to get taken out by an owl.
Well, it's funny.
Are they aggressive?
If you're a duck, Leon, it's not a good thing. Yeah.
Yeah, do you still have that predator problem?
We've been rounding up everything at night and forcing them in because
So owls hunt ducks, huh? Oh, that's very cool.
Yeah.
yeah. Well,
Any bird, large.
yeah, they're for a small bird because now these owls. This is gonna get way off topic, but
That's fine.
for a 2 to 4 pound or 2 to 5 pound bird, they'll take down an 18-pound goose.
Yeah.
Like they're
Yeah, for
Wow.
viewers, like there was an owl at Bert's, like near Bert's
yeah
farm
they
or
were
homestead, and then they're taking out like over 10 of his ducks.
yeah.
How many ducks do you have? Well, still have.
Well, now I think we're down to about somewhere between 13 and 15. But yeah, we lost like Leon said, but probably about 10. But it was
Damn.
not all at once. It would basically come in every night and pick one off.
Yeah.
But it couldn't pick it up. It couldn't pick it up and take it away because they're too heavy. But they would just basically kill it there and eat what it wanted and leave. But I didn't know for sure. I thought that's what it was
Wow.
because it was a nighttime predator. And normally you get predators like a fox or a coon or something like that. They don't care if it's day, night, what time it is, right?
So it only
And-
happened at nighttime?
It was only at night.
Any
So-
bears around?
Not in this area. No,
Okay.
not in this area. The only thing we would have around here that a larger predator would be coyotes.
Oh, they could be problematic then, right?
Yeah, but fortunately they don't seem to come around. You hear them in the distance, but they don't seem to come around. And I do have
You have a
large-
shotgun? Prepare just in case.
I have multiple guns, but yeah, no, I have a Great Pyrenees that he's got a pretty loud bark, but of course it doesn't matter for an owl or something like that, right? Unless he can get to it, but he couldn't because they were,
I think they're really fast. I think it's too fast,
yeah,
right?
That's a huge dog.
it is. Yeah,
Yeah.
He's a good boy.
How heavy?
I don't know. I couldn't tell you, Leon. He's like a horse. I couldn't
Can
tell
you
you.
carry him?
I doubt it. I doubt it.
Over 100 pounds.
Yeah,
Probably, yeah.
If he stands up, he's the size of my wife.
Yeah.
He's a big boy,
Oof.
but he's just a gentle giant though.
That probably won't do much for the predator problem then.
Yeah. Well, it's with people. Like he barks when he hears things and things like that. But as far as with people goes, he just loves people. But
All right.
yeah. So that's where are we anyway? Where are we in the
You just
conversation now?
started talking about Adriano and
Yeah. So
ETF.
we last fall, basically I think it was August. I started selling off, going all into ETFs. By September, I want to say I was all the money had been transferred out of all the high interest savings accounts because I think at that point I had accumulated around the $200,000 mark. That was basically just sitting there making, especially after COVID, it was making nothing, right? Because the interest rates dove and it was just a lot of money doing nothing. So I started buying all in, got into, like I said, some things that didn't do so well, some things that are. Overall, I think when I first started in, I think I was in about I wrote down here somewhere, about $296,000 invested, basically August, September last year. And right now I am sitting, I was higher, but I've ducked just down below 500,000 again. So I like to say I'm a millionaire, only because if I take in my home and my portfolio, I'm sitting around that mark.
Are
But
you still dabbling in any other adventures like real estate
not at this
or?
point. But
Yeah.
I've thought about it, but
I don't think it's worth the risk.
that's kind of where my head's at now.
And granted, like let's just say for everybody who thought real estate was a good investment, it might have been prior to 2015.
Yeah.
It's gone downhill a lot since then. And those who bought in thinking they were getting a good deal from those very low interest rates during COVID, well, most of them are up for renewal now, and they're paying very likely 3 to 5% higher than what they were. And they were already super tight based on what they
Yeah.
could borrow. Obviously, they borrowed way more than what they could, right? Based
it's-
on they probably weren't running their numbers properly, and well, banks are left holding the bag. And granted, I don't think it's a very good time coming up for renewals very
Well,
soon.
It's very
Yeah.
scary when you look at all the homes that sold during COVID, and then you look at the values now. They're not
Equal-
worth what people
30
were
to
paying.
50% lower.
Yeah, I can't imagine being one of those people, and I feel bad for anybody that did that. I mean, there was a frenzy there. They all thought they had to get in, and unfortunately, I think it's going to bite some people. But
Good thing for us who are actually buying the banks, it might be a good time to prepare because the dip is coming.
yeah, exactly.
SPC and LVS are looking at you. And
Right? Yeah, and that's some of the stuff that I've started getting into more and more, as opposed to some of the high yield stuff. Because my yield, I think, is still sitting around 25% overall.
ooh, that's a little high.
It is, right? But a lot of that is because I'm trying to get.
Do you have a lot of HHIS still?
I have a lot of HHAS, I have a
that
lot of
makes
MSTE, and I don't want to sell them per se because I like taking that. As long as they keep paying me, I don't reinvest in them,
Mm-hmm.
but I use it as a good chunk of money. Like, because between the two of them, it's over right now. Well, MSTE, I doubt is going to hold its current dividend payout unless things turn around the next few
I
weeks.
highly doubt it. Reverse split has to
Highly
come.
doubt it.
Reverse split is coming.
I wonder if it will or not, only because if you look at Purposes Ethy, that is such a low, it's been sitting just over $1 and they're still paying out. It's crazy.
And how much do they pay?
Yeah, well, I do have some Ethy B, which is not this. It's pays a little more than Ethy, and I think it's like 0.58, sorry, just under 6 cents.
It's
That's
actually
pretty
not
high.
doing terrible.
Right? It's
Yeah.
crazy. So I don't know. Like, I mean, if they could, I think if it was a U.S. fund, like you're saying, JJ, I think they would have to almost be forced to do a reverse split,
That's where we're at right now. $1.18.
right?
Hey.
But I wonder if it's
Hey, it was
different.
traded at if we look at the year to date on this thing, the lowest point was $1.06. Okay, so it never
Yeah.
reverse splitted.
No, that's what I mean. So maybe it's different for the TSX. I don't know.
I think. Okay, granted, reverse splits are super common in the high yield space in the U.S. because they don't care, right? There's so much competition, so it doesn't even matter at this point. But in Canada, I think they want to avoid reverse forward splits are awesome. I mean, split funds they offer forward split all the time, and then with stocks, I mean, it just means that you can buy in a lower price but have super good projections. But for reverse split, it has such a bad name to it. Technically, nothing happens. It's the same thing, but there's a bad. It's kind of like a bad omen.
It's a
Like
bad taste.
no big Canadian fund manager has reverse splitted so far.
Yeah. So
as far as I can remember.
My hope is that MSTE will wait it out because I'm really hoping that come October, November, that things will start picking up a little bit
Mhm.
for Bitcoin, which of course should have this, a pickup for MSDR. But we just got to get to that point. That's my fingers crossed,
Yeah.
Because I don't want to bail out of it. I want to hang on. I want to get my money back at least, but might take a while.
Is there a reason why you bought into Ethereum? Do you have ETHY and ETHY.B? .B is just the unhedged.
Yeah, I just have
version?
.B. I only have .B, and the only reason I have it, and I don't have much, is
Like Adriano?
Well, no, it's one of those things where I do my buys.
No throwing shade, by the way. It's just like
No.
Yeah.
I do my buys, and then if I have like $1.50, $2 left, I go, I'll buy one of these. So I've only got, I can't remember here. I've got 15 of them. That's how.
Because you want all your money working for you.
Do you believe in do you believe in Ethereum, or were you just entrapped by the high yield projection?
For that one, it's such a low buy-in, and it's paying, and I just figure it can only go up.
What did you buy?
It's not one I plan to hang on to. It less than that. I'm green. Let me just see if I can.
Oh, you bought here like $1.47?
Oh, I have.
Or way earlier.
Let me see. No, it's been recent. It's just been.
So it has to be somewhere here then.
See if
because if you're green, $1.64. If you're green, then you have to buy in the last month.
Yeah, it's just been.
Or are you talking about green stock price wise or total return wise?
Both.
Oh. Okay, in the last year then it has to be, because prior to June 30th, oof, look at that. Ooh. It's been a roller coaster, but it went.
Yeah, my average cost per share is $1.53.
Oh, not bad. What are you waiting for?
I don't know. It's paying 6 cents, man. It's like I say, it's not a hold for me. It's just a place I'm parking pocket change at the end of my buys.
Semi-monthly or per? I think it's per month, right?
per month. Per
Okay,
month.
yeah.
Yeah, it's got like
Okay.
what is it, like a 42% yield. So it's just such a, I don't know. It's hard not to buy it. Even
Yeah.
like I said, I just can't see it going down a lot more. I mean, it could, but if I sell it, I'm not making much, right? Because I only have 15 shares. It's only,
Hmm.
or 15 units, I should say.
15 units, huh? I guess we'll go through your entire portfolio and
Yeah.
we'll talk about points where we think we can trim and consolidate
Mm-hmm.
because I don't think you want another like part-time or full-time job just managing your portfolio. So the easier it gets,
Are you kidding? This
the
is great.
better.
I'm
You actually
joking.
do you like it?
No,
I mean,
I
by all
do
means,
it.
if you actually like it, by all means.
I enjoy it, but no, I tried to simplify it. I tried to scale back, and I started to, and then I started, looking at some of the stuff that we were talking about in the
Mhm.
WhatsApp, especially with the split shares and things like that. And I started looking into those, and then things started to grow again, right? Because I don't want to sell things at a loss. And the stuff that I want to sell, I mean, I could sell HHAS. I am up, I think, $13,000 or $14,000
I'm
there,
out.
but
HHIS, by the way.
I did see that you were out of it. Yeah, I
You'll
did
go
see
through.
that.
I'm gonna do a separate video just talking strategy wise because I
Mm,
love talking about strategy, and I feel like those ones it helps to formulate the long term thinking, and obviously it'd be beneficial for those who can cherry pick for their own accounts, right? Granted, I still have it in a just a margin account. It's like probably not gonna touch it. I might just dip it. I mean, trim it slightly here and there, but it was the fact that it doesn't belong. It doesn't belong well in a TFSA. It doesn't. Okay, let's just put it this way. It does not belong too well in any registered account if what you care about is long-term performance because of the
yeah,
equal weighted structure and being Crips 2 so crypto heavy and the high weighting in highly volatile stocks, obviously, for those
It's
options, right? But
right.
it can suffer from the long-term performance.
it's not equal weight. I think Biggie is the equal weight
No, it is
one.
equal.
Yes.
HHIS is equal weighted basket as well.
Is it? I
Yeah.
thought the same thing as Leon. I thought it was Biggie.
It's market cap weighted.
Really?
Yeah.
Wait. Okay, let me just
But
check
yeah,
this
I
now.
also sold off HH in my TFSA. I think like a day before you or something. Yeah.
So I mean,
Biggie's next.
it all depends on what your goals are, right? From a long-term
Yeah.
perspective.
Yeah, same. Yeah, it's not the best option
Okay, no,
right
yeah, you
now.
were right. It is a bit more market cap weighted, but not quite. It's not market cap weighted in the sense that, well, if it was market cap weighted, Nvidia and Apple would be top. It would be the highest. But okay, we can just go through the
Yeah, because they
list.
rebalance every quarter or something.
Yeah.
So that's why you see you don't see Nvidia at the top.
Hmm.
But
No, that's fair. Yeah, this is what we have as a breakdown.
yeah, it's a nothing wrong with the fund. It's a great fund, and
Yeah. Oh, I'm not saying it's bad at all.
yeah, it's good for yield and stuff. But like right now, yeah, especially since we're young, we want more total returns,
Yeah.
and so
So from
there's
if you
other
care about
options.
income perspective, obviously it's pretty attractive. Granted, it might be too high, like the weighting. I mean, an overvalued stock. So like Palantir is probably overvalued. Reddit maybe underperforming in some way. I mean, there's that. SoFi is meh. Circle is I don't know much about Circle, so I can't really comment on that. But okay, well I guess Coinbase strategy is lower on that scale, so it's not bad. So I would say it's it's definitely planned better than Biggie.
Mm-hmm. Yeah.
But in my opinion, if you want it to be a bit more, let's just say like a bit more hybrid between growth and income, Hamilton's Q Day is the best one
Yeah. The
out
day
of the three.
series. The day
The day
series is doing
series,
very
it's
well.
it's not even close from a total return perspective.
Yeah. Mm-hmm.
Yeah, even if let's just use the old fish calculator because we did a back test on that. And let's see this.
Oh, what a great tool, eh?
Oh yeah, it's very nice.
Yeah.
Okay, let's just do. Is there leverage? Okay, maybe we can do QQQL versus Q day. Okay, maybe that's not a good comparison. Let's just
Q-Day is on the Neo exchange. So
Oh, okay, yeah. Good. HHIS and Baker on TO, right?
yeah.
Okay. Yeah, 1 year return. Look at the 1 year total return wise.
Yeah.
It's not even close.
Yeah.
Yeah.
Huge difference.
Yeah. That just means that, I mean, one year return of HHIS is not bad, but this is total return. So it's both NAV and price. Oh, sorry, both NAV and distribution collected
Yield.
in 1 year. And if you get 8.56% and the yield projected on HHIS is, I don't think it's changed, right? So it's still 25%.
I believe so.
Hovering around there.
Hovering at 25%. Okay, let's just take 25% off of its face value. If you get a 1 year return of 8.56%, that means you could have only used, okay, so yeah, if you do 8.56% divided by the projected yield of 25%, let's just say, that means you can only use 34% of that 25% yield that you collected throughout the year while maintaining a relatively flat price. That means you still have to invest at least 60% of your distributions collected in order to maintain your capital. So it's all a balance between, do you want to like take in less yield and have a flat or rising NAV? So obviously if you're actually older and actually depending on this income for your livelihood, that means that you need to be basically recontributing more of your distribution,
right,
in order to maintain your capital, because you don't want to run out of money too early, right? I mean, for us, it's different. Like we can run out of money early. I mean, we still have the younger years to actually work it back, right? It's less so, but it's a huge problem if you're in your 50s, 60s, 70s, and if you run out of money too early, what's next?
Yeah,
right.
Exactly.
That's still something you have to think about, because you're not at the same level of energy and physical fitness to have to go back to work at that age.
Yeah.
Can you scroll down? I
And
think
look at Biggie. You can't use any of the distribution.
Can you scroll down? It says, I think it says the NAV price here too, like more lower. This Q-Day more lower. Yeah. Says HHIS, the price return was negative 11%. So that means you needed to reinvest at least 11% to maintain it, right?
Yeah, 11% of that 25% distribution. So it's more or less 60%.
You're talking about 20.
Right? Because if we're talking about the yield, it might be more or less depending on the price, but we'll just say a flat 25%. Because what was the latest? We can do a better calculation based on its price. Let's just look at the dividend history. Where is it?
Well, go to the HHIS page first. You're not on it.
I am.
No, this is the harvest. It's just talking about the high shares.
Oh, okay.
Can you actually go to the page?
Let's just
HHIS.
Just Google this. I clicked on this. Isn't this the first one?
No. Yeah, that one.
Okay, here we go.
Yeah, and
there
then
we
it
go.
should
Okay.
say even it's
okay. Based on its current price,
28.
28%. Okay, 27 cents per month. Okay, let's just say 27 cents. It was in that basically $11. I think the lowest was like 10 something. If we look at this properly, just at HHIS.
Yeah, look at price.
Yeah. No, this is actually not. Okay. Okay, we're just gonna look at the HHIS stock price. Okay, here we go. 1 year. Okay, yeah. The highest it was at was past $14, and then on averaged out, 52-week high, 1543, 52-week low, 960. Like we can just do an average of that price then. So let's just take, because you're doing a 1 year past return, right? So you would do 1443 plus 960 divided by 2, just take an average. So you're looking at about $12 flat. Let's just take that as a case-by-case scenario, and it was paying 27 cents per month. So 27 cents per month times 12 divided by the current, like the stock price, average stock price, about $12. So you're looking at about a 27% yield in the past year. So that means that if it fell by 11%, that means we have to recontribute 11.22% of that 27% yield. So divided by 27, that means that you had to reinvest 59% of it to maintain a flat capital. Yeah.
Yeah, if so, you're
And then
talking about
Biggie, you
distribution.
can't take any of it. Otherwise, you're down. You can't take any
Yeah,
of it.
it's not a very
Actually, you're
impressive
still down.
performance.
You're still down. You're still negative.
Yeah,
Yeah.
I was hoping it would get a little push when they added the SpaceX.
I think it's too early.
It is, but I'm hoping because I want to get out of that one. So
Maybe. But yeah, this might be a good time for Bert to share his screen. I think you have a spreadsheet of all your
yeah,
holdings.
we can go through all that.
Let's do it.
Critique it.
Let's look at that.
All right.
Cool.
So this is largest holding to smallest holding. This is
Wow.
combining all accounts, bring them into one.
Mm-hmm. Can you zoom in? So we'll just go down the list one by one. So I'm just thinking about the viewers. This spreadsheet might be too small.
Yeah.
Okay, that's perfect. Yeah.
Top holding.
You got her. Just waiting for that bad boy to take off.
Wait, is this market cap weighted? Are we going from largest to smallest?
Yeah, we are.
Yeah, largest in amount
Yeah,
of
but
shares.
your actual largest
But
on Blossom
Well,
is like the
Yeah, so I don't have the TPU on here. We can talk
Candle
about
Life
that
one.
separately. Yeah, the
we can still talk
TD.
about it.
yeah. So that's the largest holding. I
What
can't
is
remember.
that consisting of? That's just
It's
a.
U.S. large cap.
Can you just switch to your
It's
Blossom?
a TD. A TPU is the TD
US
US
equity.
Equity Index.
Yeah.
So
It's
it's
an ETF?
like a S&P 500 kind
No,
of.
not
Wait.
quite. It's a
Or-
large cap only. So it's not S&P 500.
Let's see, Blossom.
Yeah, so
Yeah, only large cap.
that's TPU is your top holding there.
Yeah, that's
Yeah.
my largest holding.
Joey mentioned.
So we can come back to that.
All right.
Okay,
So you have
I think TD the TPU fund is going to behave very similarly to the Global X US large cap corporate class, so HULC.U. So if we're looking at the holdings breakdown, yeah, it's only large cap. It's like a smaller. It's almost like a HYLD sense of S&P 500, right? Like you take a sample of the entire S&P 500 of including just the large cap
proxy index.
proxy index. Yeah,
Cool.
it's not a bad fund per se. Do you know your total performance for TPU?
I
Since you've
believe
held
in
it?
the last 3 years, I think it was 17%.
That's it.
I
No,
believe so.
like annual.
Annual?
Annual?
Like you like annualized or like total?
Yeah, it is.
Yeah, 3 years annualized.
Oh,
think it was-
that's not bad.
Yeah, I
Yeah.
think it's pretty sure it was around 17. I just looked the other day.
Yeah, and you don't have too many choices on Candle Life, so
No.
you can't really change it.
How long have you invested into it? It's with you. It's through your.
It's through my employer, so it's been
Hey, do you get a
9, 10
match?
years. Yeah,
Yeah.
I max it out, the match on that.
So it's like a group RRSP then.
Yep.
Okay.
Yeah.
Hmm.
Yeah, so that one I don't really touch. I have it in my included in my Blossom, but I don't really touch. I just update it once in a while because it's it won't link to Canada Life.
Okay. I'm just gonna do a back test of TPU versus S&P 500 basically, just to see how that works. Let's set SP.
So on the screen is all your DIY holdings.
Yeah, so this is all stuff that I hold Wealthsimple.
It's a lot of holdings. How many in total?
Yeah, it is a lot.
Okay. I can just show my screen quickly
Yep.
just to look at that. Take over screen. Okay, yeah. So I do a back test, a 3-year back test. So we have TPU here, which is the TD one, so large cap. HULC is the same thing from Global X, so just large cap. And you have HXS here, which is just the S&P 500. So the entire 500 companies, whereas TPU and HULC are like I think it's 150 of those 500. So it's like a proxy. And then you have ZSP there as well. These are, I think, TPU is hedged to Canadian dollar. HULC is hedged to Canadian dollar. HXS and ZSP are not. So the 3-year return wise, it's doing just fine. So I wouldn't even touch it. Like
Yeah,
it's faring very much in line of just the S&P 500 or hedged.
yeah. So yeah, that one I
So
leave
yeah, I wouldn't
alone.
worry about it.
I figure I can't mess that part up.
Yeah. I mean,
Yeah.
unless you can do, is there a NASDAQ or tech equivalent? If you want to be more aggressive, you could.
No,
No,
it's
there
very
isn't.
limited. Very limited.
This is the best option. I also have Canada Life, so
Ew.
Yeah.
no, not out of choice because of work, but I get to transfer out my Canada Life RSP like maybe every few months or so,
Mm.
and
And
then
to your like your self-directed RSP basically.
yeah, and then I can invest in other stuff. Yeah.
Mm-hmm. That's cool. All right, Bert, back to you.
All right. So we'll go back to the holdings. All right. So yeah, the MSTE is the biggest holding. Like I said, it's it's a bit of an anchor for me. My average cost is $7.23.
Oh
so
my.
it needs to recover quite a bit before I can. Now I mean, doesn't have to. I think it needs to get up around the $6 mark before I'd actually break even when you calculate the dividends in. And then of course the HHIS, which, like I said, I don't reinvest in that one either, but I am up on it about 13, just between 13, 14,000. And then
What's your average price for HHIS?
let me find it. It's not great because, like I said, I haven't really been averaging down.
Mhm.
1248.
It's not bad.
Yeah,
It's slowly recovering.
So I'm sitting at a profit right now of 13,684
Because of your
with
distributions.
with the distributions.
So
Now,
you're
I
up,
don't
technically. With
technically I'm
distribution
up.
collected. Okay.
Yeah, and those distributions, same as MSTE, I take those and I've been reinvesting into lower yield funds. You'll see them in this list here. Basically trying to average myself down and to build up these more
Anchor
stable
positions.
Anchor positions, yeah.
Anchor fundamentals.
Yep, exactly.
In the words of Perry, MST is a juicer.
Yeah, it's definitely that. Now, hopefully it stays that way. That's my hope. I mean, if they keep paying at least that'll help me continue
I'm
to.
still surprised its distribution hasn't changed. I'm like,
Yeah.
it's more, it's coming soon.
Yeah, it has
probably.
to. I'm assuming it has to, unless they get a little bit of a jolt back up again. Maybe that volatility seems to keep it. Yeah, you know.
Yeah.
So anyway, if we look down there, so we got the HYLD, which I think we all do love. Biggie. Like
What's your average price on HLD? Just give me the average price for all of them when we go down the list.
Sure.
So I want to see, yeah.
Sure. Some of them I won't actually know, but most of them I will, because I don't have them all hooked up to Snowball.
Mm-hmm.
All right, so HYLD. Average price is $14.63.
That's hot. Ooh, okay.
Yeah. I'm up about $6,500 on it.
Okay.
Biggie's a loser for me. I think it's a loser for a lot of us.
Yeah.
Let me find it. It's my average price there is $24.33. So I am down.
Oh, you bought it very early, yeah?
Yeah, I'm down $2,800 on that one.
$24.
So I need it to have a little bit of a lift.
Okay.
QQC. Let's see if I actually arrange these a little different here. Average cost there is $24.19. I'm up almost 11,000.
$24.19. Okay.
Etchy or ECHI. Average cost is $11.78.
Okay, that's a good price.
A Cameco, I am unfortunately down on, but I think it has a future. I wasn't really. That's actually it's not my pick. It's my wife's pick. She really feels Cameco's got a future ahead of it. So we're taking a little gamble on that one.
Mm-hmm.
Yeah.
My average price there is $17.19. So I'm down right now about $176.
Okay.
CNYE, of course, we all know another Bitcoin.
Coin face, yeah.
Right.
Nice.
Now I'm down to about $2,000. My average cost there is $733. USCL.
Actually, wait. Can you tell me
Yep.
tell me total return wise? Actually, I probably should have started from the beginning for each listing. So you tell me the average and total return wise so far.
Sure. So we want to go back to the top
MSTE,
here.
yeah.
So MSTE. Average cost is actually, it shows that
Oh, average is fine. Yeah.
726 is what it says.
Close enough. It's fine. We can ballpark it. How much are you
And
down?
I'm down 53,679.
Ooh.
You just want to rub that in there, JJ?
Yes.
All right, HHS.
Down. Up or down?
I'm up 13,684.
Okay. HYLD.
HYLD, I'm up 6,500.
Okay. Next.
Biggie's another Anchor, $2,847.
Up 2,500? No, down.
No,
right?
no, down. Come on. Is anybody up on that?
Say 2,500, more or less.
Yeah.
Okay. QQCL.
QQCL, 10,800. Up.
Very nice.
ECHI, I'm up about 1668. Cameco, I'm down $175.
That's fine.
CNYE, I'm down to 2,050.
Ooh. What's your average price on CNYE?
733.
733. Okay. Moving next.
All right, USCL, I am up $4,500. And Utes
Up. Average is what?
for USCL, 2281.
2281. Okay.
Utes, I'm up $1,900.
Okay.
HDiv, I'm up 4910.
Average price? Very low. Very nice. So yeah,
HDiv,
tell me average and then up or down.
Okay. HDiv 2084. I'm up about 4,400.
Mm-hmm.
PLTE.
LNGE. LNG.
LNGE. So that is not an ETF. That's on my list here.
Stock,
But that's
right?
that's
Yeah,
a
okay.
stock. That's
One of
that
your pickers?
mushroom company that turned into
Oh.
an oil and gas company. I still can't
What?
wrap my head around this. But anyway,
That is a huge change. What?
yeah. So yeah, that's another anchor. An anchor as in a sinking ship type deal.
Oh my. Okay.
PLTE.
Oh, wait. Average price and up or down?
That one, it's not even trading.
Oh, it's delisted?
It's currently, it's not delisted. It's been halted for quite some time. So they're not allowed to trade until they hand in their
Oh, the
financials.
okay.
Yeah.
You're down how
Yeah.
much?
It says I'm down $1,600 and some odd dollars, but I feel like it's more than that. I don't know. Maybe it's not. Maybe it's
Okay.
not the worst of the worst. PLTE,
You forgot HEQL.
that one, I don't have the average on here because I don't bring that one all in because my kids are invested in it. So I don't bring it into my snowball. But
wait, we could just talk about you. How much do you have? Right, because your kids is a separate portfolio, so we keep it separate.
It is. HEQL, well, it's probably all around the same. So 34, 36 is my average.
Okay, we just
And
say
I'm
that
up
then.
like $375.
$375.
Personally,
Okay.
personally myself, I only have 72 shares or 72 units.
Okay. Palantir.
Palantir. Well, what do we say about that one? 2307 is my average. So that's a kick in the shins. I'm down $1,200.
Mm-hmm. Did Paul influence you in that picking, or did you actually have conviction? in
No,
Palantir?
actually, I thought it would do better. Especially during the war and stuff, I really thought it would do better.
It's very overvalued for what it is at.
Yeah,
That's the slight problem.
I'm kind of finding that out.
It's always been overvalued. It
It's
was
always been, yeah.
overvalued when it was rallying. So like,
Yeah. So I need a rally there so I can, cut ties. Class A.
Yeah.
1431. So I'm up $2,400.
Okay, very nice.
LBS 1216.
You bought it very early. Okay.
Yeah, so I'm up just over $1,900.
Okay, very nice.
BMAX 1478. I'm up just around $660.
Mhm.
Q Day I would like to have more of, but it just doesn't seem to want to come down. So I'm
What's your
1389.
average?
Or sorry, Q Day 2460.
Oh yeah. Okay. Yeah.
So just around $3,900 up. SBC.
Oh, you
average-
need to move down your screen.
Sorry, I got too many screens going.
Yeah,
oh
that's
wow,
good.
there's more.
There's more.
Whoa, come on now. Yeah, I got to scale back. I won't lie. I keep
SVC,
I keep
okay.
seeing other ones I'm interested in, right? So
Yeah.
SBC 1389. So I'm up just to
1389.
almost $1,100.
Okay.
Bank 940.
Oh, good price.
So 23.50, I'm up. Pagey,
23.50.
I'm up, but very little because it doesn't seem to be doing as well. I'm at 27.48.
27.48. Okay.
So I'm only up like $16.
Okay.
S-Day, 23.78.
Okay.
So $690 profit. H-Diff,
Yep.
886. So $268. I'm up. CMCL, it's another early one I'm into here. So
Very
1840.
early, yeah.
Yeah, 1845.
How long has that been out?
I don't
Trading
think
for
it's
less than a month.
yeah.
Actually, no, I lied. It's a couple months.
So for that one, I'm up like $18. C-Day, 25.55.
You forgot GDV.
Okay, it's at a different order on this one. So GDV, 1206.
Okay.
I'm up like $40.
Mm-hmm.
C-Day, 25.55. I'm up $800. BK, hey, don't be laughing at me. 14.73.
14.73.
So I'm up $160.
Okay.
HHLE, I'm just kind of dabbling in that. I don't have much of it. 7.76. So I'm up $20.
Do you believe in healthcare?
I just figure it's one of those ones that's cyclical, I think. You know, to me, it's low right now.
Okay.
It's how I feel about it. I don't believe in healthcare, so to speak. It's just I just look at it more of a maybe possible opportunity for
Swing
a
trade.
bit of a swing down the road.
Okay. Up or
Same as
down? Up or down?
up $20.
Okay.
Cozy, another small position. I just figure people are spending all their money at Costco. Maybe I can take some of their money too. So it's $8.98. So I'm up just over like $16, $17 there.
Do you actually want to keep it?
I don't know. I'm just gonna kind of watch it.
You have a huge list. How many holdings do you have here?
More than I need. I'm not sure.
Like 30 something?
31 ETFs.
Okay. You could think about trimming if you want.
Oh, I definitely should. My problem is
yeah, let's finish with HEY.B. What's your average price and up or down? I'm assuming you're up, yeah.
Well, we actually have triple Q in there. I guess I passed it
Oh,
earlier.
yeah. Okay, yeah.
So I'm
yes.
I'm down a little bit right now on that. So my buy-in was 43.93. So I'm down.
Why did you buy that?
Okay, global beta.
I'm just experimenting, playing with it a little bit. I don't have much.
What was the
Logic.
thinking behind that?
Well, I was watching that rocket. Unfortunately, like most things, when I buy it, that rocket stops. I'm always late. I'm always late to the game, Leon. So I'm down $60 on that one. But I mean, as you guys know, that changes pretty quickly.
Yeah.
Ethy average is 153.
Oh, TQQQ, you're up or down? You're down, right?
I'm down $60. Yeah.
Not as bad as I expected, but okay.
Wow.
I mean, it's a 3x leverage. Like
Exactly. Yeah, exactly. So that Ethy
Big swings.
B is $1.53. So I'm only up like $1.65. But like I said, it's such a low buy-in right now. It's one of those I couldn't resist. I just throw my remaining change in there and see what happens with it.
So that your whole list, huh?
That's the whole list, guys.
And what's your current portfolio value of average? If overall, if you don't mind sharing. To YouTube, basically.
Yeah, overall, it's just slightly under the 500,000. I think right now.
Is that including your TPU?
Yes.
Okay.
Yeah, TPU is sitting at. Let me just pop it up here. Just because, like I said, I don't mind sharing. I did say take some snippets. I don't want to show account numbers and stuff, but I do have some stuff
No,
here.
don't do that. Yeah.
So TPU is sitting just under 119,000.
Oh, you have a big RSP.
And
So that's your group RSP.
that's just the group one.
Okay.
And then if I look for, where am I here? Yeah, the Wealth Simple. Oh, this is the one I'm looking for or not. Yeah, so that's my Wealth Simple. So you put the two together, I'm just under 500.
490-ish.
Yeah.
Right? Yeah.
Yeah, I broke the 500 and then
Woo!
Yeah, we lost a little bit.
Oh yeah, by the way, come this week, it's gonna go lower.
Wow. Aren't you a nice guy?
No, I mean look at the group chat. It's Israel did some more stuff.
Oh,
supposedly.
No, I did not. I've been
right
focused
now,
on
basically, yeah.
what the heck?
Yeah.
So
Our chat's blowing up
Perry's
again.
going to be doing some more swings.
Oh yeah.
Yeah, so that's where I'm sitting right now, just under the 5. So yeah, it'll probably drop down a bit more. And honestly, other than the fact that I don't want to see MSTE drop down more because I don't want to lose the distributions, I'm not against prices being lower because like most of us, we want those prices down to buy.
Yeah.
Exactly. Yeah.
Everybody wants the growth, but when you're trying to get those dividends built up and whatnot, that was the other thing I guess I was going to show if we want to go there.
Sure.
Close those windows. So if we look at my distributions now, like I said, I'm not an idiot. I expect that MSTE is going to cut. Whoop, wrong one. Let me find it, guys.
Your snowball analytics or something.
Actually, I there we go. I got. I set myself up with so many screens here that I maybe I confuse myself sometimes. But so this is my snippet. This is what I'm actually bringing in right now.
On Snowball.
On Snowball, yeah. So I don't go by Blossom. I love Blossom as far as some things go, but I don't find it totally works for my setup currently. And yeah, I don't want to bash Blossom, but there is some glitches
for tracking
for guys like me that have tracking, especially when you're using more than one portfolio. So this is my current, and I'm totally reinvesting everything, as well as adding $500 a week. If I have more money, I'll add more, but that's my pay myself is $500 a week plus I reinvest my dividends. So everything at this point is going into the more secure, 10 to 15% yield range. Yeah. What are you thinking, JJ? I see your thoughts here.
My brain is always running.
Yes, I know.
So do you like that? Do you like that yield though?
I don't mind the yield in the current environment, right? But we all know that's not likely going to stay that way. So I don't want to take a lot of
How
gambles.
is your tax situation though?
Well, because everything's in registered accounts for the most part, it's not affecting me. Right now, actually, what I'm doing, I guess we haven't talked about this yet. I'm trying to keep my wires crossed because I know we tried to do this interview before, but I'm actually pulling out of my TFSA currently. So my dividends, which
actually, no, let's start with this. What is your marginal tax rate? Do you know?
I'm not 100% sure offhand. It's 25, somewhere in that range, I'm thinking.
So okay, actually no. Let's put it this way. What is your income coming in from your job?
My job last year, I was between 110.
Okay, that's high. Your marginal tax rate is higher than that.
Yeah. So this is what I'm doing right now. So as I was explaining, my TFSA, well, the two TFSAs, I'm pulling the money out right now. So that $4,000 a month that they're bringing in, or plus $4,000 plus, I'm pulling that out and I'm actually reinvesting it into the RSPs. So, because my plan, like I said, I'm hoping to retire early. So I will hopefully be able to.
Okay. Actually, you said is this including overtime? Like the 110, 115K?
Yeah, that's including overtime.
Then you're in Ontario. Here, I'm just going to share this. This is a great tool, by the way. Tax
nice.
Yes. So it shows all the rates. And since you have a lot of working income, this is what you're going to have to be thinking about.
Right.
So, yeah. So this is just Ontario, but this is not what we want to look at. We actually want to go down to this because this is not including the federal rates, right? So this is just the Ontario provincial rates. And then you tack on, I think, 15% from federal, give or take. So this is the combined. So to find out actually what your marginal tax rate is, you look in the other income side, basically. Well, let's look at 2026 projection for this year. If you're, okay, yeah, so you're over, I'm assuming you're somewhere in this range here.
Yeah, but she has RSP contribution too.
No, I'm just factoring just your marginal tax rate. Yeah, okay. So your highest income bracket is, let's just say your average out about 40%. Yeah, that's what you're sitting at without factoring your RSP contributions.
Right. So that's why, like I said, right now, my TFSA dividends, I'm pulling out. I'm investing those into my RSP. Last year, I did the same thing, and I ended up getting $24,000 back.
Makes sense.
Right. So
yeah.
because I hadn't been using that contribution room. Now I'm only gonna be able to pull this for maybe 2-3 years max before I'm gonna be maxed out, and then I won't have the choice. I'll just have to take what I get.
Mm-hmm.
But last year, that's what I did. I pulled out, invested in the RSPs, took the tax refund, maxed the TFSAs, and then reinvested the money back into the RSPs. And my hope is to do the same thing this year, because the other benefit to doing
So you say
this
your
is,
wife is not working, right?
right?
Do you want to
So-
just give me approximate breakdown of how you're split? Let's just take how you're split TFSA versus RSP wise. We don't really care about the other account values, but those are the most important. In terms of your, in
the
terms of tax
TFSAs
planning.
are maxed out, so they're in the 200. Like they're actually correct on Blossom. They're in the $207,000 range. RSPs,
Is this both? So two individual TFSAs or any joint ones? I don't think actually. I'm not
two
sure if they're
individual.
joint. Two individuals. Okay.
Two individual.
So both. So you invest for both you and your wife's accounts, right?
Yes.
Cindy and Bert. Okay.
And then the RSP, I think, is
Actually, I can probably just share this. It might be easier for people to follow along
Yeah.
with.
What are you writing down?
yeah, he's working away. I don't know.
Yeah. Okay. Yeah.
Cool.
And then you have, because this is important for people to follow along, to think about for their own tax planning if it's
Mhm.
useful, right? Because I mean, if we didn't have the taxes to worry about, well, then it's kind of useless. But
Right. Yes.
that's not the case here. We are, and people who haven't realized, we are in a very socialized country where your marginal tax rate is very high.
Mhm.
So this is what you need to think about: minimizing the taxes you want to pay towards the government. And yeah, because guess what? They take over 50% of what you make
yes,
on average.
and they're not done.
Oh, they are not done. Okay, yeah. So an RSP wise, how many do you have there?
That one is, because that's one of the ones on Blossom that's a little skewed. So RSPs total.
How many RSPs do you have? You have one. You have one for you
I
and
have
one
for
for
me, and then
Yeah.
I have a spousal. So between the two
Okay.
of them, it's about $112 or 112,000. Sorry.
one spousal. Okay, 200. You said 200 something.
112.
112. Okay. Are you split? Are you doing a even split?
I'm working on that. Yeah. So
You
everything I'm
Because
doing
what you
right
need to think
now-
about, what you need to think about is, because you are in such a high tax bracket and your wife makes nothing. So what you want to maximize is do an even split between you and your wife, so that
Yes.
if you want to retire early on, you pay less taxes, because that spousal contribution after 3 calendar years, don't forget, because when you contribute for the first 3 calendar years, if you take any of that money out, that's
Yeah.
still under
Your
taxed
name.
under your name, under your tax bracket. So after 3 calendar year, let's just say you contribute some from last year, 2025, by 2028, then it moves over to your wife's name.
Right. Yeah. So
And
I
then
just,
you might want to think about, if you want to retire earlier on, let's just say you want to withdraw earlier on, right? To remax out your TFSAs at some point. If you want to withdraw earlier on, then you want to think about maximizing your spousal first,
Mhm.
because, well, obviously she makes no income, so you can withdraw, I believe it's something around the 15K, I think it's 15K per year, tax-free completely. That's just based on the personal tax credit, right?
Personal-
right.
yeah.
Yeah, up
Yeah.
to $15,000, up to $15,000 to $16,000. It's all. I mean, the first $15,000 to $16,000 is always tax free. I mean, what's simple, just for compliance reasons, they usually withhold like 10 to 15% upfront, but then you get that back during the April tax filing season.
Yeah.
So if you want to like maximize that, then you want to focus on doing your spousal first.
Yeah. That's where my focus has been now. And basically, I don't think
What
I
is
know
it
where
even? What is it split right now? Is it like even ish?
no, it'll be another 30,000, and I'll have them evened up.
Okay.
Yeah. So what was it?
75-ish. We're talking, and like 35-ish, give or take.
Yeah, a
Something
little
like that.
more the other way, but close. Yeah.
Oh, so this is higher, or is
Yep,
first
that's
higher?
that's higher. It's closer to 70 and 40.
Oh, okay. Yeah.
But yeah,
So,
especially having the work RSP, right? I think that's where your mind is kind of going, because I've already got the other RSP as well
mhm.
through
And
the
your
employer.
employer matched up to like what, 5%?
Yeah. Yeah.
Yeah. So definitely, I mean, at least for this year, depending on how much you want to work, focus on this.
Mm-hmm.
That's
Yeah.
more important.
Yeah, so that's where I've been going. So the 4,000 a month that I'm pulling out of the TFSAs and the 2,000 a month that I'm putting in myself, or $500 a week, I guess it works out a little more than 2,000 a month. That's all going into spousal right now.
Mm-hmm.
So
What are you holding in your spousal account?
all the same stuff. Basically, what I hold.
Wait, is this all like averaged out across all your accounts?
It
Hopefully
is.
not, right?
It
Is
is.
it actually?
Yes, it is.
Oh boy.
Yeah. Her stuff, everything in her name is actually a little less volatile. Her accounts perform better than mine because they're the lower yield.
No MST, no biggie, right?
Very little, not
Oh, you
compared
still
to
have
mine.
some?
Yeah, yeah. Well, you know, share the
Oh,
wealth,
my.
share the pain. I don't know.
What does she think about all of this?
She's good with it all. Like she doesn't really stress too much about that kind of stuff. It's more something that is on my mind as opposed to hers.
And
I
anything
guess
on anything on margin?
Yep. Yeah, and it's all mixed in here too. So we do have
Oh my
two
God.
margin accounts. Yeah.
Okay.
Not MST.
Wait,
No,
MST on there too?
no.
Isn't that like 90% margin requirement now or something?
100.
Probably
It's 100.
100, I'm guessing.
Yeah, it's
Yeah.
100%.
Because I was seeing a comment by someone saying like in Canada or on TSX, if the ticker is less than 5, the margin requirement is automatically 100 or something.
Maybe.
Because I do remember it quickly jumped from like 50
To 75.
or to 70. Yeah.
Yeah, it
And
changes
then
quite a
from
bit.
my last comment with the, I think when we did that MSC video with Sean, someone said it was already at 90%. I'm like, oh shoot. Yep, that's great.
Oh yeah. What else did you guys want to talk about, or want me to share anything
What is your plan for your accounts?
more specifically?
Do
My
you like?
plan.
No, the thing
my
is,
plan is
are
to
you
scale back.
are you happy with all these
No,
31 holdings? That's the thing.
MSTE is it's just
Yeah, it's
hold it.
100%.
Yeah,
Yep.
MST. I'm holding it until I can at least break even. I don't want to lose the money. HHS, like I said, it's just more or less funding the other ones right now. So I may just let it average down in the profile,
Yeah.
in the portfolio, I should say. I'm building up HYLD. I'm not touching Biggie. I want to get out of that one.
Yeah,
QQCL,
Biggie. Yeah.
I just kind of sit on QQCL. I haven't added to it. I just let it kind of do its thing. I've been buying into Etchy still. Cameco, I'm not touching. USCL, I'm just letting it sit.
You should build up.
Yeah, I mean, Utes or Oots, whatever you want to call it.
Yeah.
It's, I depending on the price, I'll buy a little bit here and there if it drops. HDiv, I'd like to, but it's just one of those ones that just, I guess I should just buy into it, but it just keeps climbing.
HDiv or HDiff?
HDiv.
Okay, this one. Okay, yeah.
But HEQL, I keep buying here and there. I plan to.
I don't know whether you should keep buying it for yourself because you
with
could.
the timeline, you mean? Yeah.
Yeah. Oh, it depends. How is your physical health?
Good.
Both you and Cindy.
Yeah, both good. Yeah.
Okay. Have you guys had a will set up?
Yes.
Good.
Well, nicely with because of with Wealthsimple, you get the willfully
because
and all
in
that.
Ontario you have all those notary fees and everything
Yes.
that you have to going through court. If you don't, guess what? Yeah, the government
Right?
takes
The
most
government
of it.
takes it. Yeah.
Most of it.
I am liking these split shares. Like I don't know that I need to carry as many as I do, but I do like them.
Trim BK or SBC. Pick one. You don't need both.
Yeah, like a BK. One thing I do find with that, because the distribution varies.
It's variable. Yeah.
Yeah, it's a variable, so I don't like that as much.
Okay.
Yeah, so trim that and
Okay, so the ones from Quadravest are variable because I know Brompton is set in stone, so it's either you
Yeah.
have it or you don't.
Yeah, but BK
Yeah.
changes.
Do you like that or not?
Not so much. I kind of like to have a steady.
Okay, then get rid of.
yeah, just do
Just
SBC.
consolidate into SBC. That's the easier
Is
option.
this the same holdings?
PayG and CMCL I'm kind of watching them, right? I'm just kind of, I may invest in them. I do like to have that world kind of coverage. Like PayG, I thought would do better, and then maybe it will. It's just,
GDV, if you care about total returns, GDV is the better option.
okay,
That's why I have it.
nice.
But it all depends on you, right? Because PayG technically pays more and it's semi-monthly. GDV, again, Brompton, so it's 10 cents. I think it's 10 or 11 cents per month.
Right.
It's capped at that. But performance-wise, GDV is not even cool. It's like, it's very good for
Very
your
interesting.
world exposure.
Well, keep your notes here and send it to me just so I can go back and look at that, JJ.
So PayG, what do you care about more? Do you actually care about maximizing the income potential of this portfolio? Or once you actually scale down your job, do you plan on having like a like a part-time job, like basically buffering your income portfolio, or what is your your retirement situation look like?
I'm hoping not to have to work, right? But
Actually, what's your house valued at? You only have one property, right?
yeah, it'd be somewhere in the 500 range.
What kind of house is this? Like a 5-bedroom thing situation, or?
Yep.
5-bedroom. Okay. Did you get it? Did you get appraised recently?
No. It's
Might
been,
want to look into that.
yeah, it's been quite a while. I can only go by, neighboring type of situation. And because we're in the,
Do you plan on staying where you are for
Yes.
retirement?
yeah,
Okay.
my wife does. So I guess
She doesn't want to. She doesn't want to move.
She has no interest in moving. So
Okay.
yeah, because
You
I've
guys
actually,
have nice animals. It's a good place, I
yeah,
think.
Is
Yeah,
it,
they're
is,
hard-
it,
they're
is it a
hard to-
split structure for your house, or is it like a bungalow type situation?
it's a story and a half or story and 3/4 type of deal. So it's 2-story.
Oh, okay. Nice. So, are you in the basement? Just curious.
No, I'm right now, I'm in an office on the back of my shop. I have,
Oh,
I have 1, 2, 3, 4, 5, 6, 7 outbuildings.
around your property or at
Yep,
work?
yep. No, around my
Yeah.
property. Yeah.
Very
You should
nice. That's pretty cool.
Check out his channel. You walk around your buildings.
That's very
sometimes.
cool. Okay.
Yeah. I've built most of them. So except for this one, it was existing.
Is your house fully paid off here, or you still have a mortgage?
No, I don't have a mortgage.
Mortgage free. Very nice. None of that. Okay. For your margin accounts, you're close to generational then, right?
Yeah.
Actually, not quite. Yeah, TPU doesn't count. Never mind.
No, I believe I'm $90,000 away.
Okay, so your average interest rate is at 4.45%. Do you plan on selling your own options?
Not at this point. I just don't feel if I wasn't so busy, JJ, I think I would take the time to learn.
You could.
But
once you transition to retirement, like do like
Yeah.
part-time work or something, because
Yeah,
it's
then
like it's another job by itself. Just has to be on.
Exactly. And I just don't have the time to take all that on.
Mm-hmm. How much are you borrowing from your margin account? Do you know? Actually, do you think you can get a better interest rate with your house than what Wealthsimple is offering? Because you might want to look into that. You just get a HELOC.
Yeah, it's been on my mind. I've been debating it. I would
Right?
have to.
Because the lower interest rate you pay, the better.
Yeah.
And you don't have to worry about getting margin called or anything.
Yes.
Like the only
yes.
reason Leon and I are doing it is because we don't have a house. So we
Yep,
don't necessarily have another option. But if you already have a house and it's mortgage free, you could think about a HELOC because that will give you normally a better interest rate.
Yeah, I would have to check it out. It's been on my kind of thought list. I've discussed it with my wife, and it's a possibility. We would just have to, because I don't have an actual mortgage with anybody, I would have to approach a bank and work something out, right? But
And I'll send you this notepad if you want it.
sure.
Yeah. Yeah. So look into the HELOC and then Chemical. Okay, I guess HYLD. You already have it pretty big, but I would say build up USCL to a similar volume or amount as HYLD, since you want both. Right? Not one is not necessarily better than another, right? Because when the Canadian
one's
economy
more
is
concentrated.
when the Canadian economy is doing slightly better, HYLD will do better. When US is technically better, USCL will do better, and USCL technically maintains its NAV better from a day-to-day basis.
Yes, I've
I
noticed.
think
you
you
care
got it
about-
mixed up. HYLD is US. HDIV is the Canadian.
No, I said HYLD versus USCL. No, I'm
They're
talking
both
about
US.
I'm talking about Canadian hedged or not. Sorry, currency
Oh,
hedged.
okay.
Yeah.
Yeah.
Yeah, that's what I meant. Sorry. So yeah. So you want to build USCL up to a similar volume to HYLD. Technically the similar exposure, but HYLD is Canadian hedged. So when the when the Canadian dollar performs slightly better than USD, then HLD will do slightly better, and then vice versa. USCL does slightly better if the US dollar performs slightly better. And you'll notice that because since USCL is the entire S&P 500, while HYLD is only a concentrated mix, USCL maintains its NAV better from a day-to-day basis,
Right.
from a trading perspective. And if you care about maintaining your margin allocation, especially if you have it in a margin account, then ULCL will be a better from a stability point.
Yes.
So yeah, so you want to build that up to a similar volume. Utes, I have nothing to say. You can maintain it where you want, or you can build it up more. Check out today's video, basically, where I talk about with Paul, and we
Okay.
think about it from a cash buffer perspective. Might be
Right.
interesting.
Yeah.
QQCL, no comments. It's fine. HE, no comments. I think it's fine. HHIS, you might want to think about trimming eventually, because if you when you move into retirement, you can't rely on the distribution on if HHIS you actually live on
Yes. Yeah. True.
eventually. Do you plan on working part-time eventually, or do you want to just like work on your home?
Preferably, I'd rather work around home. Yeah.
Okay. Get rid of eventually.
Yeah.
You can't have the position if you want to retire.
Let's hope sooner than later. Let's hope sooner than later. Hopefully it doesn't take 4 years.
Get rid of when you
can't
can.
rely on distributions to live on.
Yeah, it's just way too
fully.
volatile.
Fully.
Yeah, you need to reinvest to
AKA
do that.
reinvest. I would say at least 50% of the distribution. Something along those lines.
Mm-hmm.
I mean, clearly you can probably reinvest less during up markets, but you can see that's probably not necessarily the case moving forward. It's better to take a more pessimistic approach, especially when it comes to retirement planning,
Right.
and
yeah.
say you want to reinvest more, because obviously you want to have more money during retirement versus less. So less doing basically less distribution withdrawals is always a better, more optimistic plan moving forward than not. This HYLD, I have no problems with this. This QQCL is fine. This Biggie you want to get rid of. Same situation. Etchy is fine. Cameco, it's one stock. Do you believe in the long term of Cameco or not?
I think it has, like, being uranium, I think it has a lot of potential. But
Okay.
whether or not it's
But Cameco is already in Etchy. Do you care about having a separate allocation?
not so much. Yeah, not so much. It's
Yeah.
actually, I think I was looking the other day. I think Etchy is actually outperforming HDIV, isn't it?
HHIC.
Even HDIV, isn't it outperforming that as well?
Slightly, yeah.
Yeah, it's pretty
It'll
crazy.
fluctuate. I don't
Maybe
think HDIV and
short term.
Etchy they're gonna be more or less in the same line. So I would say build up HDIV to similar volumes to Etchy, because they're both very nice. I wouldn't say one is technically better. So I would just put a note to similar levels of HDIV. Leon, what do you think? Oops.
I think HDIV and HYLD like almost like coupled together. They're very good.
They're good. But it's
They
always good to have
complement
fund
each other.
manager diversification as well, especially in retirement. Right? You don't
Yeah,
want to
yeah.
rely on just Hamilton, on just Global X, on just Evolve. You want to have a little good mixed basket between all of the
Yeah.
nice Canadian
What I
fund
meant by
managers.
that is like you could even have HDIV a similar size to HYLD.
Oh, yeah.
Yeah.
That's a point.
Oh,
There-
yeah.
I mean, I would say the top baskets here. I'll put another note here. Top anchors to consider
I'm
in
actually
similar levels. I would put
I'm actually
USCL
releasing
there.
a video later today on like just my ideal portfolio, and quick hint, there's only 5 positions, so
Oh, you can add BMAX there as well.
can check that out maybe later.
Okay. Anything else? Yeah, I would say this is the top anchor list. Similar levels.
SBC, it's pretty
SBC,
much the same.
you can't really live off the distribution of SBC to live off of.
What do you mean?
I mean, I guess you could, but I think it's always better for me because SBC and LBS. I mean, technically their distributions are more or less flat, but I guess they're kind of more treated as growth engines. But I mean, you could live off them, but they are only concentrated in one sector. So I'm not necessarily sure.
Isn't that the same as bank though?
Yeah, that's true.
I only mentioned because I saw that.
Okay, I'll just put it here. Obviously, Bert, it's up to you. So
Yeah. Now, how do you feel about the day series?
Go with what you think.
How do you feel about the day series as far as anchors?
Okay, I guess you put it there too.
I'm only curious because they
C-Day,
are kind of diversified.
okay,
in their
not
own-
Q-Day. You can't really live off of tech. So C-Day and S-Day you can think about.
Yeah. And they're also in HYLD and
Exactly,
HDIV,
yeah.
So
Yeah, that's true.
that's why you
True.
don't need a separate position. You can
Mhm.
just build out those instead.
Build up, I would just say you can build up a position in SBC if you care about the long-term longevity of the banks, which you should.
Yeah, they make lots of money.
Oh yeah, it doesn't stop. Oh yeah, so the other day, like when I was signing the new lease for the new apartment I'm moving into, they needed a certified check for the first month's deposit.
Oh,
I was
jeez.
like, oh shoot, okay. So I still have because I only have one major bank to deal with still. So I went to CIBC and they're like, oh yeah, you have to pay $10 for that. I'm like, great.
Wow.
Yep. $10 service charge.
Yeah, that's crazy.
Oh yeah, you can build up Class A if you want. Do you care about Palantir?
No, that one is yeah,
Swing.
it's gonna have to go too.
Sell eventually. PayG,
Yeah, I'm not sure. I'm
Yeah,
not
you
sure what to
could-
think of it yet. Right? Like,
I would say keep it for now. If you don't like
Yeah.
it,
it's got some good names in there. It's just whether or not it's going to perform.
look at it for long term. S-Day, you can build up this position. No, not necessarily any comments. HDIF, I think it's
A
fine.
lot of overlap.
The only problem I have, there's a lot of HDIF is underperforming
Mm-hmm.
by
Yeah.
quite a bit.
And it's similar holdings to HDIV, right?
Not necessarily. I would say that's a good point.
It's their fund of funds.
It is their fund of funds, but the allocations are different.
But what I mean is there's a lot of overlap and you can probably just consolidate it into something else.
Exactly. Like since the fact that HDIV is underperforming against the others. Okay, let's just do back testing of let's just do HDIV versus HDIF. Yeah. Yeah, let's just do a back test of all the big boys. Let's even put BMAX in there. Because BMAX I quite like. I just run this
Yeah.
analysis.
So it is nice.
Because if it's very much underperforming, okay, yeah. It's not bad. But the thing, because BMAX has a 30% allocation to fixed income, like preferred shares. So you can have that as your fixed income buffer. HDIV does not. I'm trying to see what does HDIV actually hold. I know they hold a bunch of things. Yeah, so they have tech leaders, US equity leaders. They have so they have HHIH, which is the unleveraged version of HHIS. Dividend leaders, healthcare leaders, utilities, travel, industrials, US banks, and then low volatility. I would say there's a lot of overlap. So I guess you can keep it if you want. Oops. Yeah, we're just gonna go back to the same notepad. Yeah, honestly, I have no comments. Personally, I wouldn't own it, but
Yeah.
consolidate if you want.
I
It's
would
not bad
consolidate.
performance-wise.
Mm-hmm.
Yeah.
Yeah,
And CMCL is a all-in-one basket on commodities. I think it's a good
Yeah.
buffer. It's a good buffer to have. You can build it up if you want. Yeah, you can build up this position if you want. C-Day, same thing. You can build up this position if you want, or you can just consolidate it. It's already in HDIV. It's really your opinion whether you care more about having more income or total performance, right? Because
Right.
more of the performance from seed A obviously is from that yield. So if you care about a very high like income projection, then you can keep seed A. Same story with S day, or you can just consolidate into HYLD, and then seed A you can consolidate into HDiv. It's really your choice. Or we went to BK T4Q.
That's just a play thing right now.
Okay, your speculative fun play. Let's just put it
Yeah.
that way. You can keep it if you want.
Yeah.
Yeah. What account is this in?
It's just in a RSP, I believe.
RSP, huh? Okay, I mean, you can keep it if you want. Beyond, any comments on this?
Not really. There is some people and some thoughts on holding these high leverage funds for long term. But I don't know how long your time horizon is. So maybe
If you have 10 years, if you have a 10-year plus horizon, you can think about it. If not, I would not keep it.
Stay away.
Something that they tend to use more for swing trading and stuff, right? But
yeah. Like there was a person like on Instagram, like she basically her portfolio went to 1 million and all she has is just one holding, which is UPro. And that's like triple leverage S&P 500. She held it for 6 years or something. It's done well for her. So I do want to do like some research and look into like these, how people can perform with these funds if they hold it for the long term. But in the short term, it's like a gamble.
Yeah, absolutely.
No comments. And then Costco and healthcare, do you care about it? Because healthcare is already in HDiv. So I don't think you need I don't think you need a separate account. You don't need a separate one for this. But
yeah, I was hoping more to catch it kind of at a low, right? And
Ethereum, do you care about having some separate crypto exposure?
That's more of a
okay.
It's like I said, it's like that little bit of change left in your pocket, and you go, well, I might as well put it here.
Yeah.
Keep if you want. HQL, no comments. You can keep if you want. It's really up to you if you want to keep it or not. It's a purely growth engine, so if you have a long time horizon, yeah, keep it. I don't have any comments on that. Costco, I don't know. It's already in HHIS, and then it's yeah. So
yeah, you don't need it. You already have exposure.
I'll just put a note here. Consolidate eventually, if you prefer.
Long list.
Yes.
Yeah. What?
Not terrible. Granted, if I did the same thing with Paul's portfolio, he's like 50 holdings. It's gonna be a disaster.
I was gonna say, I think I'm pretty sure Paul's holding more.
Yeah. Way more. It'll take like 3 hours. We're already 2 hours.
Hey, apparently some people like to do these very long formats while they're doing something else. So it's nice, right?
Just play it in the background, right?
Exactly. It's like a nice background music.
Soothing voices.
Exactly. So, Bert, what do you think about this analysis?
You know, I don't disagree with most of it. I think it's pretty much where my head's at anyway. A lot of it's just a matter of timing, getting back out of it.
Yeah.
Yeah.
You just have to do it.
No, I don't. Well, I don't want to do it with MSTE because that's just such a big loss. I think I'm just gonna have to sit on that one.
Okay, you can just trim. I just say you can trim when you can.
Yeah.
3 stars.
All right. Cool.
All right. So did you want to go back?
Anything else to talk about, gents?
Well, I can show you the YouTube channel real quick.
Sure.
Yeah, let's just wrap up with the YouTube channel.
Let's wrap up with the YouTube channel.
Pretty cool stuff.
Well, like I said, you can find me on Blossom if you choose to. And where's the other one? Find the right screen here.
You're more famous than us. What are you talking about?
More famous?
Yeah, exactly.
Whatever.
You have more followers on YouTube.
You have like double or...
No.
Yeah.
That's not true.
That is true.
All right, there we are. All right. So then if anybody's interested, they can check me out on YouTube as well, where we homesteading simply on under an acre.
Hey,
So homesteading. So does that mean you're like mainly trying to live off what you can
we
grow?
try to grow as much as we can between vegetables and meat. My diet primarily is carnivore, but we still do grow quite
okay.
a few vegetables. So yeah,
So do you even go to Costco?
no, not very. No. The only time I go to Costco is if I'm driving through and I'm such a frugal person. I'll pull in there and go in for the hot dog and water
And watch the
That-
crowd.
and watch the crowd and think, wow, this is just insane.
It is.
But I very, very, very seldom shop at Costco. I don't find it personally. I don't find it cheaper than going and shopping the deals at the stores, the local stores, right?
Yeah, it's not as good as before.
Yeah,
Like every
deal.
big company, they're all for the investors.
yeah, exactly.
That's how it works, right?
No, I don't disagree. They're all out to make money. That's the name of the game.
Mm-hmm.
Yeah.
Any final thoughts for you, gents, before we handle this off, and then we'll do another, I think, portfolio update sometime soon.
Yeah,
Next
down the
couple
road.
months.
I appreciate you
Yeah.
guys showing interest in my journey.
Yeah, of course, man. Everybody has snippets that they can share, and
Yeah.
Yeah, you
that's
know
the
what?
beauty of these conversations, right?
I love being part of the group that the side group that we have going, because I find I take in so much just from watching the chat and seeing the different opinions. It's really good. And Blossom, for anybody that wants to jump on Blossom, of course, it's not a bad idea. Like we were saying earlier, the opinions differ so much. You got to kind of filter through all that stuff. But
Mhm.
once you're on there, that is where I met you guys, right? Like the group that we
Yeah,
chat
it's a
with. So
great
it's a great way to find
gateway.
people. Yeah, it's a great way to find people of like-mindedness, and then you can go from there. And of course,
Yeah.
we'll all actually meet up in person soon.
Very soon, yeah.
Very soon.
At the Blossom event.
Yeah, exactly. Looking very forward to that, guys.
All right. Thank you so much for taking the time to come on our podcast here.
Well, like I said,
It was a pleasure speaking
We did it all
to
in
you.
one shot this time.
yes, it worked out well. I think I only lost connection for maybe 30 seconds there, but you guys
You
were
did?
busy. Yeah, you guys were busy. I think I just probably had this look on my face like, right, but it was all good.
Yeah, for context, we tried to film this before, but like we were getting technical difficulties and losing connection. So
JJ
Yeah.
was traveling the world. It makes it hard.
Yeah, don't
Sure.
rely on the hotel Wi-Fi. It's not very good. Well, actually, no. I stayed in like a bed and breakfast, so the Wi-Fi
nice.
it was even worse. But hey, that's how you save money on while you're traveling, right?
Very true. Very true. That's the thing, right? The more you find with people with our mindsets, right? And like a lot of people, the more money you have, the more frugal you tend to get. I don't know at what
yeah.
point. There's so many people that actually retire or die with a lot of money because they just can't seem to let it go at some point, right? Hopefully we're not those people, but
Yeah, like from last episode, Sean was telling us that you don't want to be the richest
guy
dead
in-
person
yeah.
in the graveyard, right? There's
And
no
it's-
point.
Exactly.
There's no point. That's the
Yeah.
thing. I want to have enough money at the end of the day to take care of myself. Like I said, build up that those dividends distributions to the point where I can take care of my kids, help them through school and things like that. Other than that, I just want to teach them what to do so they can take care of themselves.
Right on.
And at the end of the day, when my time comes, hopefully I've managed to have a good retirement and actually enjoyed some of this at some point. So,
Yeah.
But-
All right.
all right, guys,
Sounds great, man.
Cool.
Well, pleasure of having you on the channel, and then
I really appreciate the opportunity.
for sure.
Yeah.
Thanks so much.
All right,
All right.
YouTube. This wraps up our next Beyond the Paycheck episode. Hope you guys all took some snippets, wonderful snippets, throughout this entire episode. Like I said, this is a free-floating conversation, so cherry pick whatever feels useful for you. We'll always have YouTube channel chapters throughout, so yeah, you can skip around whatever you feel like. And stay strong, stay committed, and stay consistent throughout your own investing journeys. And see y'all sometime soon.
Sounds
Peace.
good.
Yeah.
Bye, guys.